Hi, greetings of the day. Once again, warm welcome to my channel with a new topic of seasonality. I have already discussed in some of my previous video about seasonality. One was using the panchak, the other was about the moon cycles. Let us think about the normal seasons like spring, summer, autumn, winter. All the years have the same seasons, but they are not same. Sometimes they have the extended period, sometimes they are short periods. Sometimes the intensity of the weather is at peak, sometimes basically it is normal or below average. And how all it does when everything are same in nature. The answer is external factor like pollution, global warming, disturbances in ocean, and this all creates the deviation from the normal weather which we accept. Same thing goes with the market. Sometimes the theory which we studied it works, sometimes it is not. Sometimes it is as per the time we studied, sometimes it get delayed or it comes early. Here also the answer to all those delay or coming earlier is the external disturbances in a form of geopolitical news, geopolitical wars, scams, and any such thing. So let's start today the concept of seasonality in the form of a turn of a year. And actually, I got a lead from one of the article which I was sometime going through the web by Van Valley and try to simulate it on our market. So let us start. So before we start, if you like my content, please subscribe, turn on notification for more such videos in time to come. So let us come down back to our seasonality indicator, which is basically we will say as turn of year, as I have said. From this, the idea has been taken from Van Vale and has been simulated on the Indian market. So what basically we did, we try to take the data, the historical data of Nifty and Bank Nifty, and we put certain theories which we have studied from the Mr. Van Well and try to simulate it into our market. What is basically the interval size? We are talking about the seasonality. The period of the year which we have to take it is November 19 of the previous year to January 19 of the current year. We have to find the difference between the close price in between the closing price of these 2 days. And say for example, if these 2 days, that is November 19 and January 19, we have an off in the market, so we will take the price action a day after in the case of November, and we will take the price action a day prior in case of January 19. Now when we take the two closing price, we will create a difference in percentage between the two closing price. We will say that the coming time from 20th of January to 18th of November of the current year will be bullish if the difference between the two closing price is greater than 3%. If it is between 0 to 3%, it is neutral. So it can go basically sideways to bullish or a sideways to bearish. And if the percentage is less than 0, that is negative, it is a bearish call. Now, what the year 2023 says, 19 November 2022 being the Saturday, we take into account the closing price of 21st of November 2022, and this is mentioned, it is a spot price of Nifty. Then we have taken 19th of January 2023, the closing price, again spot Nifty. The difference between the two is minus 0.3%. So it is negative. If it is negative, as per the previous table, it shows that we can have a bearish price action from 20th of January to 18th of November 2023. Now, this is what the theory says. Now let us try to simulate it with some data of the past. So I have used Python for the same, and let us directly go down to the Excel sheet. So this is basically okay. Let us see this. So the blue line shows the 2-month returns, that is from 19th of November of one year to the 19th of January of the next year, and the orange line signifies the return from 20th of that particular year to the 18th of November to that particular year. Fine. So we can see that when we are having a negative return, sometime it has not worked, sometime it has worked. So we have taken the data of Nifty from 1994 to 2022, and the graph is in front of you. We will come to the analysis of the data just after this graph, and this is how it has shaped up for Bank Nifty. So let me take you to the Excel sheet. Just a minute. Okay, so I think this is the screen. You must be getting the Excel file. So we have a Nifty data from 1994 to all the year to 2022, and then I have the price difference. Again, if you see, we have the November close, we have the January close, we have the status based on the data, and we have also seen that the status was bearish. Finally, the result was what? It is bearish, then it has bearish, but it has failed. It has become bullish. In bullish, it was bullish, neutral, sideways to bearish, or sideways to bullish. It was bearish. Let us come back to the consolidation of the data. So, till now in Nifty, we have clear cut total 6 bearish signal based on the closing price. The success was on 4 year, failure was on 2 years, percentage win is 67%. Maximum win when we have taken was 48%, means market has dropped that year by 48%. And the maximum loss means the year was bearish, but it becomes bullish, and the loss we took was 10% on the closing price basis. Likewise, when we were having the signal as bullish, we have got the 12 years to be bullish, 4 to be the failure. Percentage win was 75%. The maximum win or the maximum percentage win which we took was 80%, and the maximum loss which we took is 23%. So maximum win you can take as a maximum profit. Now, when the signal was neutral 7 times, out of 7 times, 3 years were bearish and 4 years were bullish. In which, when it was bearish, we have got maximum of 13% in comparing the 3 years, the max of that, the maximum profit. And when it was bullish, we have got the maximum profit to be 36%. So this is all about Nifty. If we compare it with Bank Nifty, we have got total 4 signal as bearish, 2 success, 2 failure, percentage win 50, maximum profit 60%, maximum loss 80%. When it was bullish, we have got 10 to be the success, 4 to be the failure. So around 72% was our percentage win ratio. Maximum profit we took was around 110%, and the maximum loss which we took was around 51%. That is clearly visible from this 2007 and 2008 graph. Now, when the signal were neutral, all the time we have got it to be bullish. And the maximum profit which we have taken in all those 3 years was around 53%. So what we can infer is that when it is giving a bullish signal, 75% of time, it is giving you a bullish year ahead, and with good maximum profit of 80% and then maximum loss of 23%. In case of bearish, it has worked for 67% of time. Likewise, in BNF also, you can say when it is giving a bullish signal, the win ratio is much better than the bearish signal. In totality, basically this turn of the year indicator gives you a idea that how the year is going to shape. I personally believe that if something is helping you, which is in a band of 60 to 70%, means 60 to 75%, you know that this thing can occur, because again, my market is all about the probability. So you are just talking about the probability of your chances of winning, correct? And these small things are just a kitty, है are just a small things are in your arsenal which can help you to win the market. I was just reading a few days back a report published by SEBI, and I feel most of you may have gone through the particular report. And it frankly says that the statement which we hear from the market veterans, that 95% of the people lose in the market, 5% only win. This was actually a theory for me. Okay, somebody has said me, he is a market veteran, he is senior to me, and everywhere it is there, all around the market. So let us accept that. But now a data from SEBI has come which actually is saying the same thing, which actually says the same thing. Fine. So these things can just add on to our kitty. They can just help us to be a better trader. You can't comply directly on the theory. It's again a probability. I have just given you the concept. We know that 2023 we got a bearish signal. We only can say that time will tell that either it was bearish or bullish. So here I will try to end my concept, and if anybody wants to see my code or the dissection of the data, I will be happy to share it on a personal window. So this is how this works. Thanks for giving the time to my channel. Thanks for listening and watching this video. Please do subscribe, turn on your notifications, share it with your friends, and do rock the market. Thank you.